And then, any questions you guys have, feel free to let me know or jump in. Um, so where should we begin? I should maybe start prepping um things to talk about so there's better fluidity. But let me share my screen. Let's jump to the NASDAQ. So yes, as we know, it was a wild week in the market. We saw this this huge down move, which was kind of insane. And I think the NASDAQ was down almost 400 points and finished up like 300 or 400 points that day the Russia invaded Ukraine, and that was a really, really big swing. So I know the market bounced back because of sanctions, and this is my 2 cents. I don't think those sanctions are gonna really do anything harmful, or I shouldn't say harmful, but they're not gonna do anything to deter Russia. So in my 2 cents, I feel like this is definitely like a planned and premeditated attack, and I'm sure the Russians were already expecting these kind of sanctions. But the U.S. is in a really interesting position, and Europe, because if they, our economies are so battered from not just COVID, but the last financial crisis and all the money printing we've done, and wealth inequality. We have a lot of issues here, and Russia is so tied into the global economy that if they hurt Russia too bad, it's actually going to end up hurting us, but more so Europe, more so. So I always feel like the U.S. can't do much in terms of like stopping this thing, and I don't know. This could be a quick war, where Russia just seizes Ukraine and nobody does anything about it. So I think we have to wait and see how this war develops, and also we have to wait and see if the U.S. Gets involved. I don't know if any of you guys saw, but I saw. I should actually look it up. Let's Google it together. I did see a social media post that Nvidia got hacked, and I think it was a bad hack. That happened like yesterday or 2 days ago. Let me see. Okay, they're saying it's maybe not Russia. Okay, this is another group that hacked them. But I think that's another really big worry that this is going to turn into a cyber war. Um, just because that's the way people are fighting wars these days, and no one wants to have a physical encounter with Russia, and Russia might do some cyber things to us, and we might end up doing some cyber things to Russia, which I think could get to be very scary. But I think that's what's going on in the market. Some other things that were interesting. I know we were talking about wheat. I forgot what is the wheat symbol. What is wheat symbol on here?
I could feel the FOMO demons on my back when I bought those wheat futures, because like you said, the move was already like skyrocketed, and then when I jumped in, I knew that I could just feel the FOMO on myself.
Yeah. No, I hear you, man. ZW. Wheat's on quite the wild ride, you know. But I'm gonna stand. I think you stand by this too, guys. I'm gonna stand by, like, these people are responsible for like 13% of the world's, what is it again? 13% of the world's production of wheat, and then also they're responsible combined for like 30% of the world's exports of wheat. Um, so if there's like a prolonged war in there, and I was reading some like articles from agricultural analysts, if there's a prolonged war there and they're not able to get wheat out, or they're not able to harvest their wheat, that's going to be really bad on wheat prices and grain prices, which are already very high, which we can look at a longer term chart and see that, yeah, this is going back to 2019. Prices of grains have literally doubled, at least prices of wheat. The other thing that I think is interesting, we could take a look at oil. I actually kind of like this pullback in oil. This might be a good place to buy, right? We see we have this clean floor over here. Let me bring this down. Yeah, we have a very clean support level over here, so I think this isn't a bad place to try to grab some oil. I'm thinking once again, right, a prolonged war in Russia is not going to be good for oil. And I know we're seeing these really big swings in the market, the big swings in the NASDAQ, the big swings in oil, even the big swings in gold. Oh my God, I'm gonna pull up the gold chart too. Gold went crazy. But there's just a lot of market volatility, because of this Russia thing. And I think what you're seeing is, like there was a whole herd of people rushing to buy. I actually want to pull up the NASDAQ again. I think that's a good example of this. So let me see if we get like a 15-minute chart. So I think this is like, the crash from the war stuff, which is almost 1,000 points from this peak, right? And I think the thing started to bounce, and there's a lot of people that's just jumping in to this short very late, and then I think the market started to bounce back. You're seeing this battle here, and this might be a place where people are like covering and stuff, and now you're seeing this, this jump back up and also back above this level, which I think is a very important level. Let me bring up a longer term chart. So this was a place of resistance before, and it's just interesting now how you're seeing a lot of like challenges around that level in the nearer term. Let's just pull that up. I can bring it back to yeah, like you see around this level, right? Like there's just challenges like breaking through or staying down, right? Challenges breaking through or staying down. So you can see through that price action that this is an important level, even though it may not look like it, but it is. And what else could we look at? Yeah, gold. We looked at oil. We looked at wheat. I think another thing that could be a really good bet in this environment is cybersecurity. I think this is, if things escalates further, I think it's going to turn into a cyber war, and I think that'll be good for cybersecurity stocks. You're seeing CrowdStrike had a huge jump. There was another one. What's the other big one? I forgot their name. There's CrowdStrike, and then there's
Zscaler.
yes, Zscaler. Zscaler is interesting because they got destroyed on earnings. So this could be a potential buying opportunity. They got destroyed, but they rebounded. I gotta look into those earnings, but I think that's a segment that we could look into and maybe exercise our oh wow, Palo Alto Networks. This is looking really strong. Maybe this is the cybersecurity stock to look at. I think what's the other one? Cisco, the cybersecurity. That's nothing too crazy. I think there's FTNT. So I'm just throwing out some cybersecurity names at you guys. There's CrowdStrike, there's Zscaler, there's Fortinet, Cisco is a cybersecurity company. There's Palo Alto Networks, they're a cybersecurity company. What's interesting, there's Norton LifeLock, but I feel like that's more of a they're more like personal cybersecurity company, and I feel like these ones don't have as much juice as like the enterprise companies really doing the sophisticated AI cybersecurity software stuff. And yeah, I mean, so that's my 2 cents. I'm still in gold, copper, and I just want to talk through this. I just want you guys to learn from my mistakes. This Intel, I'm getting destroyed in it really bad. Because I bought April puts, and I should have stuck to my rules of waiting for the breakout. And this is why you got to wait for the breakout. I mean, unless you really have understand something going on fundamentally in the company that's just going to drive it through, You know, I mean, I think that's different, but if you don't, you know, you really got to wait for the breakout and short after the breakout. I think gold was a good example of that. The 4-hour chart. Yeah, so there's this level on gold. Let me see it much on the daily. So this is, you know, so gold has been in this range for a pretty long time. Let's see, since when? Since June of last year, right? That's a little over 6 months, 8 months or so, right? It's sitting in this range, and just, you know, technical analysis, you know, FYI, the longer the range and the more that you know, something is in a range or sitting at a level, the typically the more explosive that breakout is going to be. You know, this is a really long range. I mean, then we have the fundamental drivers of uncertainty in the market, rising inflation, rising interest rates, you know, an uncertain, a slowing economy, the number of factors, and then you have the whole Ukraine stuff and central bank buying.
That's a nice bull. That's a nice bull flag pattern too. When it probably like right around 1850 when it broke out, that would have been a nice. It would have been breaking out
Oh,
that flag pattern.
yeah, yep. I'm actually gonna bring it down to a small level, and you can see that better. Um, so it breaks through, it pulls in, and then this consolidation over here. So I actually bought this consolidation. This isn't much of a consolidation. It's a little sloppy up top, which is interesting, right? But the floor is very clean. Up top is very sloppy, but the floor is very clean. You know, so I bought the floor, and you know, then the Ukraine stuff happened, and then you know all this happened, and I'm actually still in it though, because I'm just making a bet that this war might be prolonged and we're not out of the woods yet. You know, the sanctions are nothing. You know, Russia's playing a game of if you're not gonna physically do something to deter me, I am taking this thing. And Andrea, you did an excellent little research project on Ukraine's economy, and it's almost like Ukraine is the crown jewel of Europe. You know, so who cares about the sanctions if I'm going to go and acquire this super profitable asset? You know, and they're going to, you know, they're going to be stronger in terms of like global trade and all these other things, you know. So that's my 2 cents, you know. I think if no one's gonna put hands on that man, Putin is just gonna, you know, keep doing this thing, and then he's gonna seize that place, and you know, who knows what's next from there. I don't know if you guys saw that. There were also some headlines going around about, you know, China sending fighter jets over Taiwan, you know, and that's another real thing too. If the US cannot contain this situation, or the US and Europe can't contain this situation, then China can give it a try as well. And if both these people successfully take back their countries, you know, who knows how much more they want to take. That's also my 2 cents on that. But hopefully we don't get there, because that's really scary. Um, but yeah, so that's my take on what's going on with the market and what I'm looking at. And you know, I don't know if you guys have any questions or thoughts you want to share.
I mean, it looks like what we're doing as far as with the Russia stuff, like we're just looking like we're doing something without really doing anything, right? It's kind of
Yeah,
like, yeah, we're not. I mean, we don't plan on going over there.
yeah, no, I don't think they want to get into a physical war with Russia. And you know, that's another thing too, right? We're talking about this huge bounce. That bounce in the market came off of sanction news, but the sanctions are nothing, you know. And I think Russia is already financially prepared for those sanctions, you know.
Jeff, when they talk about the ruble, I mean, and how it's at the as low as it's been, I guess, ever. What does that really mean? I mean, does it? What does that? I mean, does the ruble even matter? I mean, I know it's their currency, but what does that really mean? They don't buy, we don't, but they don't purchase oil in rubles. I mean,
I mean, it's bad for their local economy, you
it's
know.
just bad for the people,
Yeah, that's
which they
usually
don't
what.
care about, I'm sure. Yeah.
It's bad for the people, but it's, yeah, it's bad for, yeah, anyone who holds that currency or buys good with that currency, you know. So once again, yeah, they might be buying oil with dollars or whatever, um, but they you know, you still have your wealth in this currency, or you know, I mean, maybe the super affluent Russians, they have their wealth in the US and in China and in all other kind of places. But even just a person making like 500K a year, you might be making a lot more money than your average Joe, but you're not like the richest person where you could go and have all these kind of assets in other places and diversify out of your currency. You know what I mean?
Gotcha.
Yeah, so yeah, that's actually very bad for that country. And the poorer you are, the worse it is, because the less you have access to putting your money somewhere. I mean, but then this is the whole bull case for Bitcoin, you know. Um, so yeah.
That was the whole premise of the book, The Deficit Myth. They were saying that since the US currency is, I guess, I don't know if it's right to call it a store of value, but since our debt is denominated in US dollars, we could just print more and it really doesn't matter. But the economies that aren't able to pay their debts in their own currency are the ones that are in bigger trouble.
Yes, that's true. And I think it's maybe to investigate if you know how Russia's monetary system works. But then also, only do that if you're really going to go and make a play in like Russian currencies. You know what I mean? Like if you're not really doing that, then you don't gotta kill yourself getting that kind of information,
Yeah, the issue though is Russia's definitely playing the long game, because how ironic is it that they take up the issue of sanctions with the UN Security Council, and Russia is the head of the UN Security Council, and with Russia's veto and China's abstention, the UN Security Council did not vote to approve sanctions against them. So it just seems like they just have been plotting this for a long time.
Yeah, I mean, honestly, the way Putin has been moving politically, I just feel like he's been brilliant and flawless. And yes, and I want to pull up a world map because I think people think it's just about Ukraine. Whoever is kind of able to control Central Europe, is going to be able to just like control the whole Europe and that whole like that whole situation. And I think that's not going to be good for Western Europe and also potentially America. What are we looking for? Let's do world map.
That info that you gave Andrew was amazing. I can't believe that they could provide food for 600 million people.
Yeah,
That's a lot.
no, absolutely. This is a small. I want to get a full world map with countries. These are like products to sell. I don't want to buy. I want to just see an image. Maybe this might be okay. Okay. What the hell? This is not it's not what we want. Excuse my language. Maybe this is all right, let's see. Right, so you see this is obviously Western Europe, and this is the border of Russia. Ukraine is actually a pretty big landmass, and Russia might try to make a move for like Belarus, Lithuania, Latvia, Estonia. What a lot of people are saying is that Russia wants to take back all the Soviet Union countries. When it collapsed, Western Europe cut it up and took them or whatever. put them under their control, and Russia wants to take those countries back under their control, right? And if Russia is able to successfully do that, now Russia also has the power to like invade Germany, invade France, invade Spain. Like you see like kind of like the war strategy that is going on over here, and they could kind of come in and like dominate Europe, which could be very scary. And if they can successfully dominate Europe, now that's kind of like what keeps them from us, right? Like this ocean and having China, I mean not China, Western Europe and even Africa, just like you have to go through these places to physically get to the US. And but on the opposite end, let me zoom out. Our Pacific is open, because on this side, that's literally, they're connected here. So, but yeah, so I think that's also what Russia's trying to do long term. They, it's not just about Ukraine. They want to get back all these countries, and then now, like, what the end goal is, I don't know, but like, yeah, it could be really scary for Western Europe if they're able to successfully take back like all these countries over time.
I think that's what Putin's end game is. He wants to reunite the former USSR. He's a bit of a narcissist, so he wants that to be his legacy. And then strategically, a lot of those countries like the Ukraine are have lots of natural resources. Also, they have access to the sea, to the ocean.
Mm-hmm.
I saw that too. That coastline, he misses that coastline.
Yeah. So there's a lot at stake, and just the balance of power. Western Europe and the U.S. is not showing strength and not able to show force, and these people are building themselves up. Both China and Russia have quietly been building themselves up, building up their technology. I remember when Russia had the oil price war with Saudi Arabia, when oil went down to $6. I think I read something like Russia had put something like $500 billion, in reserves, so that the country can withstand like an oil shock, oil going down to $6. Like, and that's why they were able to entertain that. Like, so just like you were saying, Andrea, too, like they've been preparing for this. They've been saving up their money, the basic things, building up their military. I didn't know that they were the head of the UN Security Council, so making all kind of political moves. And this what they did with Ukraine, right? They blocked Ukraine from joining NATO, and they're just trying to snag Ukraine before it joins NATO, and that's just such a smart move. Because if Ukraine joins NATO and Russia does this, then they have to fight the whole US and Western Europe. But if they're able to do that without Ukraine joining NATO, which seems like that's what they're doing, they're just playing a lot of political games. So yeah. It's going to be interesting to see how this turns out. Well, maybe not interesting, because it's actually very scary things, and people are going to be losing lives.
It is very scary, but I think it's going to have a long-term impact on the markets, not just because of the fear and uncertainty. I mean, this conflict can be resolved, but the balance of the shift in the control of the resources is what's going to have the longer term impact. And one of the criticisms of Germany was that when Germany's economy was recovering, they wanted to manage their debt, so they didn't invest in shifting away from a reliance on fossil fuel, and they made and they were overly dependent on Russian energy. So that's why they're so vulnerable right now, because when their economy was recovering, They didn't make that investment. Now they're completely dependent on Russian fuel. And so I just wonder, one, for them, what the impact is going to be, regardless of the outcome of this situation. You know, they may make some investments in changing to different energy sources. And certainly anybody who's watching, the US in particular, could look at this energy dependence and really aggressively shift away from reliance on fossil fuels.
Yeah, yeah, yeah. You know, you're bringing up such great points, and I think all this also brings me back to there might be a great shorting opportunity in Europe. You know, I feel like, you know, U.S. companies aren't necessarily affected by what's going on in Russia and Ukraine, but European companies and European economies are directly affected. You know, I'm actually maybe we can take a quick look together and see if there's any interesting ETFs out there. You know, I love my ETFs. Um, let's see, region, um, developed Europe. And, you know, I also want to put out there for you guys, you know, realize how we just quickly put together a little bit of an investment thesis, right? We're looking at the this Russia-Ukraine situation. We're talking through what the effects can be for the different economies and different countries and different industries. And then right now we're just breaking it down. I mean, in my eyes, I'm just thinking like, you know, Europe might be the best short. Let's see this EZU and VGK. But yeah, this is just, I don't know. So I feel like sometimes you guys are asking like, how do I put together my theses or whatever the case might be? And this is literally how, you know, just thinking through and talking through things and putting things together. So this is interesting. It's actually very interesting technically. VGK. There's also that RSX to short. I should have been more on top of shorting that. I mean, I'm not gonna maybe look to do any trades just yet in these Euro ETFs, but you know, I'm just waiting to see if, because I think something like Russia is already in like the capital of Ukraine, so if they're able to seize, you know, the country, potentially kill the president, or come to peace talks, which Putin said he would do. Like, you know, if you know, if Ukraine was willing to, I guess maybe surrender themselves, like, you know, he'd stop or whatever. You know, what was the point I was making? All I want to say is I don't want to just jump in there and start shorting Europe. I just want to see how this situation develops before I do anything. Maybe also the homework to do is to see what countries are most impacted by Russia. Maybe I gotta do this research on my own, but I think that's maybe a good place to start. What countries are tied to Russia and Ukraine economically? You know, like just like how you were bringing up, Andrea, Germany's dependence on Russian oil. I'm wondering what countries have a dependence on maybe like wheat and grains from Russia or Ukraine. Because those are going to be the places where I think we're going to find some really good shorts or some really good buys where like, you know, grain prices are skyrocketing or something is skyrocketing, you know, because they can't get access to it. So maybe I'm not going to do this now live. This is something for me to do on my own, but that's what I'm thinking for the play. But yeah, so I guess it's almost one. We can maybe wrap up here. Does anyone have any final thoughts or questions before we go?
I have a question. One of the things people keep thinking that the semiconductor industry is going to do well because of the chip shortage.
Mm-hmm.
But and I understand the supply and demand dynamics, but what happens when a supplier can't sell anymore because they don't have, like, I mean, isn't there a point where it's just like you can keep increasing prices, but at a certain point you physically can't sell anymore? So you know what I mean?
Yeah, so you're bringing up a good question. And with this whole supply and demand thing for the semiconductors, there are people that are actually facing these issues and their stocks are doing bad. But then there's people who, you know, for example, right? You might have someone who needs to produce chips and they're getting chip supplies from another chip maker, like what you're talking about, there's not enough supply. So this chip maker can get us, say chip maker one can't get a supply. So like, its stock is going to do bad, its business is going to do bad. But the chip maker who's making chips and selling out every time, or making chip parts and selling out every time, they're going to do good, you know? So I think really to answer your question, I would say maybe the focus is to be investing in like semiconductor infrastructure and equipment. So like the people that's really, because there's some of these chip makers that what they're doing is like getting kind of like the, I don't, not the raw materials, but like the basics of the chips from another company and then doing something with those chips and then reselling it, right? Or you might have like the case of cars. The car companies literally can't build new cars to sell because they don't have the chips to do so, and they can't sell those cars, and that's hurting their profits and their revenues. So I think you have to be very particular in which kind of chip maker you're going after. I think another good place, once again, is the infrastructure and equipment space in semiconductors, because the issue is that setting up we call like a technology operation to produce a certain type of chip takes like 12 to 18 months, and so the companies who are producing like the equipment to build these chip factories and stuff like that, they're getting a lot of demand because chip makers are pivoting to, restructures how they're doing the chips to create the chips that are needed for where chips are missing. Does that make sense? I feel like I'm saying a mouthful.
So you're looking at the raw inputs for the semiconductors versus the finished product?
Not necessarily raw inputs, right? Raw inputs are like copper or silicone or silver. So not raw inputs. I'm gonna go to FinViz. And maybe you guys gotta do a little. So I also feel like I'm not communicating the best, but I understand it in my brain. I'm just not communicating it the best. But you may need to look at the structure of the semiconductor industry and then take a look at how does a chip go from literally raw materials to a produced chip, and there's a lot in that process. So you have your regular semiconductors and then you have semiconductor equipment and materials, so once again, like there's people that are just out there selling chips or whatever, and then there's the people that's because that's actually what the chip shortage is. For example, right, the type of chips you need for gaming is different than the type of chips you need in the cars to do like I don't know. One example thing is like how the cars can know if you're in a lane, right? There's a kind of chip that's doing some sensory stuff or whatever. So the chip people, like the people who are producing the chips, not the equipment and materials people, the people who are producing the chips, they go to their customers and say, what do you need? What do you need? What do you need? And then they kind of set up their factories to produce a certain amount of certain types of chips. The issue was that when the pandemic hit, like people like car makers and different industries, when their industries went to a complete standstill, those companies weren't putting in those chip orders, right? Because it's a whole planned thing, right? When you have to, once again, like for them to reconfigure their chip making process kind of takes 12 to 18 months. And it's I think you have to look at what that process is for that to like make sense to you. But that's the issue, right? That when it was time for these chip makers to get information on what chips are needed, a lot of the different industries were pretty much like out of business, so they weren't putting in those chip orders. But then the economy came back and people want to buy cars still and people want to buy whatever still, but the chip makers, their chip making facilities weren't set up to produce the chips for cars anymore. Does that kind of make sense?
Yeah.
Yeah, I know it's a mouthful and a little confused, but that's kind of what's going on. And so now the chip makers are repositioning and reconfiguring themselves to be able to offer those chips. So it's not like the chips are really like never gonna come. It just takes time. And for example, gave a great like example, right? Once these companies like the car companies or Apple or whatever company has the chips, it literally takes them a couple of days to a couple of weeks to assemble a device, but it literally takes 12 to 18 months for a chip maker to set up his factory to produce a certain type of chips. So once these people have the chips, like getting things to market is quick. But when they have to tell when the chip makers have to adjust themselves on what the market needs, that takes a really long time. So that's what we're feeling, but that will be resolved at some point. I just feel like you're probably going to see better demand from semiconductor equipment and materials versus semiconductors. And you know what? We can actually take a look at the data and see if that's true. We could do technology. We could do performance. Let's do half year performance. Who did better? Oh, wow. Semiconductors did better than semiconductor equipment and materials. Let's see 1 year. Semiconductors are doing better. So maybe I'm wrong in my thesis, but I would think that the equipment people are gonna have more demand. But this is something to look into. Yeah, this is something to look into. So maybe I'm wrong in my thesis, but I would just assume that the equipment people would have more demand because the chip makers need to buy those products to configure their factories to produce the chips. So yeah, I don't know, does this answer your question, Andrea? I know we said a lot and this might be a little confusing.
Yeah. So it's but the data is confusing, yeah. But I would think if you don't have any inventory to sell, it's still hard for you to grow, even if the supply and demand is putting pressure on prices. At a certain point, you just don't have anything to sell, no matter how high the prices are.
Yeah, absolutely. And those semiconductors are going to do bad. And the companies who can't get their chips to sell products are going to do bad. But that's to say, not everyone is going to do bad. Well, let's take a look at some charts. There's only 67 companies. Let me maybe do it by who was the best for the half year. Some of these charts are really down. Some of these charts are looking really strong. So what you're saying is absolutely correct. It's just not the case for everybody. This is actually a really good technical setup. That's interesting. The market is roaring and this thing is kind of low. Maybe there's something bad going on in this company, right? You see in the bounces on everything else, right? This thing didn't have a crazy bounce. This level is really being, this resistance level is really being supported. So maybe something to put on our radar, guys. Check out this SGH. What's the fundamentals? This is looking like an excellent shorting opportunity. But yeah, so I think you just got to investigate the industry, and if you're looking for shorts, you just got to see, like what you're saying, which semiconductors aren't able to get chips or whatever the case might be, and their businesses are suffering. And if you want to go long, you just got to find the companies that do have chips, or the companies, I just like equipment and infrastructure, or the companies who have the who's selling, the equipment and the infrastructure that people need to produce their chips. So yeah. Oh, whoops. You know what? The way these charts are looking down on the equipment side, this might also be a really good buying opportunity. Let me see. Custom. Who's still having strong sales? Some of these semiconductor companies are having still really strong sales growth. So this is it's quarter over quarter, but like last year's first quarter versus this year's first quarter kind of thing. Not third quarter versus fourth quarter. But so it's like year over year, quarter over quarter. But they're still having good sales growth. So that could be interesting. So yeah, I think it's something to investigate. Definitely let me know if you dig up anything interesting, Andrea.
Okay.
Yeah, because these stocks are down, but they're making money, so I think that's a buying opportunity, because there's real world demand. And the market's just down because the market's down, right? When we're seeing this NASDAQ sell off, tech companies aren't actually doing bad. It's rising interest rates and inflation and, Ukraine war, right? Not that the tech companies are actually doing bad. So there might be some really good opportunities there. But yeah, but all right. So I think this was a good session, guys. Thanks for making the time. I'm gonna make sure I put this up on YouTube ASAP and send the link. I don't have to edit it. I just gotta upload it, so that's fine. And you guys will have the recording.
Appreciate it, Jeff.
All right. Thank you.
Yeah,
Thanks,
have a
Jeff.
great weekend.
Okay, you too.
Take care, ladies.
Bye, guys.
Bye, Alex. Bye, everybody.